Hi everyone, let's go over all my medium time frame bullish and bearish Elliott Wave scenarios on Bitcoin and then decide what direction is most probable, starting with the first medium time frame bearish impulsive scenario where we are looking for an AB and then a wave C to the downside, where wave C is then an impulsive structure after this wave B took the origin of wave A and then a 5 wave structure. This 5 wave structure then ends up being a diagonal in a 3 wave zigzag ABC in a wave 1, looking for a zigzag in 2 and then eventually 3 to the downside to then end wave 5 and C for continuation to the upside. In this particular scenario, for a wave 2, the Fibonacci's are a little bit different than a regular wave 2 in a normal impulsive structure. In a diagonal, the most common wave 2 target is between the golden pocket and the 786, with the 382 and the 05 being rare targets, fibs taken from the high to the low of wave 1. In this particular scenario to the downside, we then look for the support areas over here, the blue boxes sitting between 26.8k and 27.4k and 26.2k to 26.4k. The main issue with this particular scenario, however, is time. That if we look at the length of wave A and the length of wave B, then this wave C is much longer in time. Also, if one would put wave A over here, then this wave C is still incredibly long in time compared to a much shorter wave A and a much shorter wave B as well. In the second scenario, we are looking for a bigger ABC to the downside, which then also is an expanding flat, but we are then looking for a 3-3 and a 5 wave move going below 24k. In this scenario, the most common target area for C is between the two 1.618s, sitting between 23.5k and 22k, and this wave B then finished at the high that we have at the moment after this wave B has an expanding flat and then a 3-3 5 wave move. The main issue here, however, is that this wave 4 is very long in time. It's 11 times longer than wave 2, 4 times longer than wave 3. That is incredibly long for a wave 4 in comparison, especially with this wave 2. And also we are then now looking for an impulse to the downside, a bigger impulse in a wave C. Now if we do go to the lower time frames in the micro scenarios, I also update you with in other videos, then at the moment it doesn't yet look too impulsive to the downside. Could this be a wave 1? Yeah, then a 2 and then a potentially 1-2. But this second wave 2 is now already rivaling the time of the first wave 2, or already starting to become longer in time now, meaning that this being a lower degree wave 2 of a 1-2, 1-2 and then a bigger 3, the lower degree 2 starts to take longer than the first degree wave 2, which is not what you want to see and lowers the probability for this to be an impulse structure to the downside all the way to the levels below 24k. If we go to the more bullish scenario over here, then we're looking for a move towards the upside. In this scenario, wave 1 or A is finished and also a 3-wave ABC is already finished. Within wave C, then a move to the downside, which is a 5-wave structure over here, and then a 1, 2, 3, 4, 5 on the lower time frames. In this scenario, wave C then ended at the 382, meaning that that is then the low of wave 2 or wave B, with the fib taken from the low to the high of A or the high of wave 1, and the 382 is a common target for B but a rare target for a wave 2, meaning that if one would get an impulse to the upside right now, the probabilities are at the moment higher for that to be a wave C to the upside instead of a potential wave 3 to the upside. But on the lower time frames it doesn't really look too bullish yet, and you can also compare it with previous price action. Look at the impulse we had over here from the low and look at this sideways structure over here, right? This does not really look the same as this move over here, and if this is only a wave 1, this is the end of 2 and we are now looking for a bigger 3 to the upside, or for example a C, you want to see impulsive structures. Usually wave 3 is the most impulsive, strongest wave, so you definitely want to see price moving to the upside impulsively, but at the moment that does not look very impulsive, right, on the lower time frames. This bearish scenario over here is a WXY scenario proposed by John in the group as well, where we then have a WX and then an ABC to the downside in a Y, where for this wave C we could be looking for a bit of an ending diagonal, and this is definitely still on the cards, not invalidated, where we then look for a 1, 2, 3 sideways 4 and eventually a 5. In this scenario though, if this is the low of wave 1, it did cross price action with wave 4. That is not something you like to see. So one might have to count this a little bit different, where potentially this is then wave B over here, and this is only wave 1, 2, 3, 4, and eventually another 5 to the downside. That's up for grabs, but at least a WXY is definitely something that is still possible in this scenario. Looking for lower prices then, where again the support areas down here are going to be very interesting. Also because there's just not much support left in this area. The final support basically around 29k also has to do with this support box that you can see over here, which is basically the final order block on the 6 hour. So this order block over here, currently that's where price is finding support together with some of the other confluences we had around 29k. But then below this area, you can see it's quite a gap to the downside. So if price is going to take this low and end up below this order block and find a closure below here as well, it's quite likely we're just going to move straight to the lower prices over here, where we then have the support box, right? So that's a very interesting support box that I definitely keep my eye on if price is going to move to the downside. Then in this particular scenario, which is also very interesting, we are then looking for wave 1 or A to be finished over here, and then this to be a 1, 2, 3 sideways 4, 5. Now keep in mind that with this impulse to the upside, as explained in another scenario, this one over here, this wave 4 is very long compared to wave 2, which is not really something you like to see. And then a 1, 2, 3 very long 4, 5, but the high of wave 1 or A is then put on top of this high over here. And then a W zigzag to the downside, ABC, followed by an X, and then eventually a Y to the downside. Minimum target usually for a wave X is the 382, which is sitting at around 30k, and the 886 is a maximum target around 31k. And if we look at the resistance areas above price at the moment, what is quite interesting is, well, first of all, this small resistance between 30k and 30.1k, that's not too special. But this one over here is interesting, between 30.4 and 30.6k, mainly because there is a high, another high, and a third high. There is a triple top over here, and there's definitely some liquidity resting above this area. And if we go to higher prices, then we have another support area over here around 31k, sitting between 31.1 and 31.3k. So those are the resistance areas for price, for then eventually another move towards the downside to then finish a wave 2 or finish a wave B. However, as it stands, putting the wave A or 1 on top of this high is not at the moment something that I prefer. I prefer price action. I prefer moves where the high of 1 or A is finished up here, and we are looking for a three-way structure. And as A, B, C starts to look quite unlikely at the moment, meaning scenarios like these where you have a 3, 3, and a 5-wave move to the downside, currently more gearing towards this being a WXY scenario, where looking at the price action locally, as explained as well, looking at the differences that we have also in the micro count and the very low time frame counts that I show in some other videos, currently the probabilities are a bit higher for a new low to be made. Doesn't really matter if price first moves up and then down, but at least this low to be taken eventually. If we look at the resistance that we have right above us at the moment, this is an important support resistance flip. Very, very simple over here. Support for a while, and now resistance. If you can pass this resistance, we can look for higher prices, to look for the triple top that we have around 30k over here, or the resistance around 31k. This is a folder that I have with highs and lows, which I think is sometimes important to have because it shows the liquidity. So before price moved down, we had 4 lows to the bottom, which is very interesting for price. It grabbed all the liquidity below and is now ranging right around these levels. But above over here, you can see a triple top. So the liquidity on the downside has been taken. The question is, will it hunt for the liquidity to the upside before potentially continuation to the downside? If we look at these CVD divergences on the lower time frame, it is a bit of a mix. As you can see, we have bearish CVD divergences over here. Now this is a second bearish CVD divergence, as the first one was between these highs, and now we have with the same high another one. Now each divergence you get with the same high, it becomes a lower probability divergence, because the first one over here already played out as this low got taken by price. So that one played out, and then price comes back again to create a second one. Lower probabilities, but doesn't mean it is not possible, right? In this scenario, more locally, we have more divergences. We have a bullish CVD here, more bullish CVD, and more bullish CVD, but also bearish CVD divergence. And the thing is that price here moved down on volume. As you can see over here, we had some volume going towards the upside, but also a bit of volume when price was moving to the downside. So we do have to keep in mind potential leading divergences as well, especially with this first one that appears on the chart. But what is more important for potential bullish behavior is that we have more local bullish CVD divergences, but also the bearish one. So it's a bit of a mix, right? We got this one over here, this one over here. It is weekend, price is ranging, not too much volume. It's not too great looking at the CVD at the moment. We do have a bit of a double top at the highs over here, but around price at the moment, we don't have too much support resistance. So the resistance that we have here has already been tested. We still have some support to the downside, which could be interesting, between 29k and 29.15. So if price would move down, that is an area I would be looking for. But more locally, if we look at the CVD, then it is a bit of a mix, and yeah, it's not too clear what it wants to do. There is, of course, more bullish CVD than bearish, so one could say, well, the bullish ones might be more preferred, but then again, we also have the bearish ones, so it's not too clear. If we then look at the probabilities, then the probabilities, we can make it quite simple, right? On the medium time frame, which is the time frame we spoke about in this video, preferably, or at least the probabilities are geared towards one more low over here, because as it stands, this does not look too impulsive. Yes, price can move to the upside, grab the triple top, for example. That's all good, all fine. But as it stands now, one more low looks to be the highest probable move from an Elliott Wave point of view, because if this is part of continuation to the upside, we want to see an impulsive structure. And if this is the low and this is the end, we want to see continuation in a wave 3 or a wave C. And at the moment, on the lower time frames, it does not really look like continuation at the moment. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.